Hey everyone, yes, we're still on the road to Fully Charged Live USA, and that means we're not in the studio. We've got minimal production equipment because all of our production equipment is packed away somewhere in the car. We also have minimal internet connection, so this is going to be a really quick and dirty update on Tesla's Q4 2019 and end of year financials. It has been a fantastic quarter. That last quarter of 2019, really fantastic for Tesla. I've written down some notes here. I've looked through the shareholder letter and I'm going to tell you the really important bits. I may have missed some things, so we can maybe do an update a little later on when we've got some more production equipment with us. The two big things, obviously, is that Tesla beat its Wall Street analyst predictions for the quarter. Wall Street was expecting less than what Tesla actually ended up bringing in. So Tesla managed to beat expectations and brought in $7.384 billion in revenue, which is higher than Wall Street said. It also managed an adjusted profit of $2.14 per share. Now, the non-adjusted was still pretty impressive, 58 cents per share for a total of $105 million. And the adjusted, as I said previously, $2.14, which is 386 million. Very, very impressive. We also saw some new records being broken by Tesla. Obviously, it managed to achieve 112,000 deliveries in Q4, which is its best quarter ever in terms of deliveries. Moreover, Tesla is confident that it's going to be able to handle 500,000 deliveries next year. That's a massive increase in total vehicle production output for the year. It is fantastic news to see Tesla pushing up and ramping up. And of course, to increase that production, we're going to see more factories coming online. We know that Giga Berlin is coming online. They're starting the construction process there. Giga Shanghai has just come online. And obviously, we've got the original factories that Tesla already had up and running earlier on. Well, in fact, before the start of last year. Interestingly, in case you didn't know, Tesla's no longer going to be using Gigafactory 1, 2, 3, 4, 5. It's just going to use the term Giga and then the name of the place where the factory is going to be located, which is why it's Giga Berlin, Giga Shanghai. Giga Berlin, we've had confirmed, is where Tesla is going to build Model 3 and Model Y for the European market, just as Giga Shanghai is going to be bringing online the Model Y when it starts production, as well as it's already in production Model 3. The US is going to remain the home of production for Model S and Model X. That's not really a surprise because both Model S and Model X are no longer Tesla's mainstay vehicles. They are higher end vehicles. They're still being produced, but not in the kinds of volumes that Tesla is expecting to produce Model 3 and Model Y. Also, we've got Tesla's Gigafactories churning out the energy storage products and also the photovoltaic panels. Last year, year on year, Tesla didn't actually install that much when it came to solar panels. The total charging for that particular market was down 26%, but storage products were up 136% year on year. A total of 1.65 gigawatt hours of storage products. That's effectively battery storage products tied to the grid. And it is Tesla's highest figure yet. I think it's higher than all of the other years combined to date. And Tesla is going to be expanding both its solar and storage markets by what it says is up to 50% next year. Interestingly, the automotive gross margin that Tesla has, effectively how much money an automaker makes on a car versus how much it costs to build that car, has ticked down a little, and that's to be expected because Tesla's producing more Model 3s, it's producing more affordable models, and therefore it's not selling those cars and making quite as much profit on the higher end vehicles. Also, it's tooling up for Model Y production, so that there are some expenditures there that have to be taken into consideration. A really interesting thing though, really fantastic news talking about Model 3 and Model Y is that Tesla's announced in its shareholder letter that it's going to increase its range prediction for Model Y. When Model Y was revealed last spring, Elon Musk said that Tesla was shooting for a range of 280 miles per charge for the all-wheel drive model. We're now going to get 315 miles per charge, which is a testament to Tesla's continued work on battery cell chemistry and improvements there, but most importantly its motor and its power electronics and its software, which is where Tesla really continues to excel. It is fantastically good news to see Tesla finishing the fourth quarter of 2019, and in fact the whole of 2019, on a really positive note. And Tesla looks like it's going to have a really good year in 2020. I've said it before, I'm going to say it again. We now need to start treating Tesla like a mainstream automaker, because it now is a mainstream automaker. It's producing high quality products. It's producing them in high quality and high volumes. And we're seeing people buying Model 3, Model S, Model X every single day. And when Model Y comes out, I think it's going to be a real turning point. Talking of Model Y is now confirmed as being in production. That's something that Tesla has confirmed. And deliveries for Model Y are expected to happen in March. That's just over a month and a half's time, which is phenomenal. By the end of this first quarter, Tesla Model Ys will be delivered to customers in North America. That blows my mind. Well done, Elon Musk. Well done, Tesla. Here's hoping that 2020 is even better for the company. Thanks for watching. Thank you for putting up with the lower than usual production quality. We are sitting in a car recording this. We're just finished charging. We're going to be heading off to Fully Charged Live in Austin, Texas. We hope you'll join us there. If not, don't forget to like, comment and subscribe. Support us using Patreon or Ko-fi, or visit our swag store. As usual, keep evolving.